Hello everybody, this is Stockerfinance. My name is David Scheuer, and let's go ahead and get into it. So obviously, as many of you may know, the Dow Jones recently plunged about 8% this morning. It's been declining for the past week or so, and this is because of the overall just market panic and market fear. There's a recent oil crash over a price war between Saudi Arabia and Russia. We're seeing the coronavirus continue to spread, especially into developed countries now. As I said again, just an overall market panic sell-off. People, are kind of freaking out over this. And it caused some of the major averages and as well as some trading platforms also to temporarily halt, which increased the panic even more. If you're not able to trade, if you're not able to sell your stocks, if the averages are now pausing, well, that's going to really freak people out, especially when the media is amping everything up so much more and shoving everything in your face. So today I'm going to talk about a little bit. I'm going to go over some things that are happening, explain a little bit of it to you, and then explain why I think now is a time not to panic, why it may even be a time to start buying stocks, and why you should really think long-term and be a long-term investor rather than thinking about these short market moves. Let's go ahead and get into it. All right, so first off, as we know, the oil is plummeting, and that's just due to a price war between Saudi Arabia and Russia. And now obviously that affected the American oil companies, just everything across the board. When oil crashes, oil is seen as somewhat, of a benchmark by some people. And so when that crashes, it just added to the panic. Obviously, this price war is completely, out of everybody's control. And in my opinion, that's something that's going to get resolved. It's just simply two countries battling it out over the price of oil, similar to the U.S.-China trade war. Not much to talk about there besides that. Obviously, this is a temporary thing, and they're going to find an agreement. I mean, they both need this trade to work, and they both need to decide on prices, so it's going to work out. You just got to give that one time. All right. Next up, the Federal Reserve has actually increased its daily bank injections to $150 billion from $100 billion. So a 50% increase there. Obviously, this is a little concerning because why is the Federal Reserve pumping everything up if the economy is okay? Obviously, it's not okay if they need to keep these banks afloat. And so that is a little concerning. They're pumping even more money into these banks to keep them afloat, to keep them running, especially after many bank stocks declined over 30% in about the past week and, some 10, 20% just today. So that obviously is very concerning and is adding to the market panic as well. However, let's go ahead and look at this. I'm just going to go through and look at the coronavirus spread really quickly because that's another big factor, obviously, contributing this. It's contributing to this market decline for a while now is the coronavirus. And a lot of people are wondering, half of them are like, oh my God, this is the end of the world. We're going to turn into apocalypse. We're all going to die. And the other half are like, this is nothing. It's, not a big deal, whatever. And so I'm, in my opinion, it's really hard to gauge here about the coronavirus and its severity. Obviously, just the panic that it's causing, in my opinion, is almost more devastating to the economy than the actual deaths that it's causing. I know that seems a little cold-hearted maybe to say that, these deaths aren't, causing any problems or they don't matter or whatever. That's not what I'm saying. I'm just saying that, when one, it's like, look at this. In the U.S., about, what is it? Where did it go? In the U.S., I think it's 550 people have died so far. 550 people, let's go see what percentage of the U.S. population 550 people is. That is 0.00001% of the U.S. population. I mean, even a percentage of just New York City or any major cities in the U.S., I mean, 500 people would only really be devastating to a small town in the United States if they're all concentrated in the same area. Obviously, that would really hurt that small town's economy. And I think the big difference here about the coronavirus is that it's ravaging through China because China did not have the infrastructure set up to deal with this kind of outbreak. They're building hospitals right now. They're trying to, trying to contain this huge thing, and that caused it to spread everywhere. Whereas the U.S., we have hospitals in place. We have, great medical systems. We have good doctors. We have, tons of biotech companies already working on, I guess not a cure, but maybe, already working to try to fix this problem and find a vaccine for it. So in my opinion, the actual coronavirus itself isn't as devastating as people are making it out to be, but the panic caused by it is what's really more devastating because that's causing people to, to freak out and stay indoors. Universities are closing. I've actually had classes here at my university cancel classes for the rest of the week, even though there's not a single case on campus. Classes are completely canceled for the term, which doesn't make any sense to me. But anyways, Yeah, so obviously people are freaking out a lot more than what the actual numbers are telling us, and how much we actually should freak out about this. So anyways, now I'm going to talk about, is this a solid time to buy? And this is a question that's a little tricky because I can't just go ahead and tell you, yes, you should buy. I'm not a registered financial advisor. However, if I'm thinking long term, if I'm thinking, 2, 3, let's say even 5 years from now, and I buy a stock today, and that company has great financials, I believe in the company, it checks all of my different check boxes, I really think that it's long term, this isn't going to matter. It's going to be a little blip in time. 5 years from now, we're going to think back, just like, when Ebola happened or when some of the other viruses happened, we're going to look back and say, oh, remember when that happened? Yeah. It's, even the 2008 financial crisis. Yes, it was devastating for a little bit, but after 5 years, the market completely recovered. So now I'm going to go ahead and just look it through a bunch of companies here. And let's go ahead and look at Disney first. So Disney, it's at about $100 right now. Today, it declined 8%. In the past 5 days, 13%. And in the past month, it's declined about 26%. That's pretty substantial. That's a pretty substantial decline for that short amount of time. Boeing as well. And obviously, Boeing has to deal with the 737 MAX crisis as well. And in the past month, we're looking at about a 39% decline. Let's look at Microsoft here. Okay, Microsoft, about a 20% decline in the past month. Starbucks, obviously Starbucks is greatly affected by the coronavirus since all of its stores in China were forced to temporarily close. We're seeing about a 21% decline. Apple stock, let's go ahead and look at Apple really quickly on the 1 month. Actually, not down, oh, there we go, this is glitching out, okay. It's down about 17%. And let's go ahead and look at Amazon here as one last one. It's down about 14 to 15%. So now my question is, let's go ahead and look at Microsoft, and I always make this comparison when I'm talking to people. Let's go ahead and look at this max chart here. Let's look at it during the 2008 financial crisis. This is its maximum chart here. Where did the 2008 financial crisis take place on this chart? It's kind of hard to see, almost, where it took place, and that's a significant drop. So here's the beginning of 2007. It's this little dip right here, and it went down about 45% over those 2 years. Now, let's say you were bought right at the tip of it, right before it happened. It's the worst time to buy. You lost 40% of your money in 2 years. If you held on, if you didn't panic, if you held on, maybe you even averaged down as it crashed, you kept buying more. Well, since then, you'd be up over 400%. That's what I'm saying, is if you have to have a long-term mindset here and think, just like Microsoft, and just like almost all these companies that have in common is they're all solid companies. Their financials are really solid. I don't think Disney's going to go away anytime soon. It's such an old company. Microsoft's been through multiple wars. It's still around. Same with Disney. Apple's been around for a very long time. It's already been through the 2008 financial crisis. Same with all these companies on here. Starbucks is still, pumping around. It's still going. It's still going to open more stores. Its stores in China are going to reopen. It's going to continue to expand. This is a very, if you're a long-term investor, this is a temporary blip in time. And in my opinion, this is the perfect time to start averaging down, to start buying more, to start doing whatever you want. Now, I can't tell you to buy. I'm not a registered financial advisor, but I can say for my personal account, I probably will be averaging down. I'll probably be putting more money into the market as long as it's solid companies with solid financials that I know that I'm not afraid to hold on to, because for all I know, the market could go straight into a recession. The entire world could head into a big recession, and that could last who knows long. It could last, 2 years, 3 years. But if I'm looking 5 years from now, these companies are pretty solid. The 737 MAX crisis with Boeing is going to resolve. The coronavirus, someone's going to have a vaccine, or it's going to drizzle out, and the economy is going to recover. This is just how an economy works, The long term, the economy is going to keep growing as long as you're picking healthy companies, as long as you're investing in a healthy market. Anyways. So I think one really important thing here to leave off on is to not listen to anyone. The news is filled with just fear-mongering. The news cares about one thing, that is clicks. They want clicks. They want you to watch their ads. They want you to watch their videos, read their articles. They don't really care, what you think besides that. Their titles are going to be the most fear-mongering, most clickbait titles, and that's something that you just have to look past. All right, guys, sorry about that. My camera actually just died, but I'm going to continue the video here. So anyways, I wanted to talk about one last thing here, and that is an article that just came up about Warren Buffett. I'm going to talk about Warren Buffett and his strategy a little bit here. So obviously Warren Buffett is a value investor, and he really has a long-term vision for his company and for his investments. He's been known, to hold stocks and never sell them. He's held on to, many stocks like Coca-Cola, and honestly, the list is too big to list all the companies he's holding on to right now. But obviously, his company, Berkshire Hathaway, has large holdings in tons of companies, and it's a pretty big deal when they do sell stocks, since they're so into just holding for the long term, letting their receiving the dividends, letting it just compound over time. But here we see Warren Buffett going in on airlines, specifically Delta, and they bought 976,000 shares of Delta in February, and for about $45.3 million. So that's not a ton of money for their Berkshire Hathaway. It's pretty much nothing actually to them, but still it shows that they're not afraid to be entering into the market right now, and possibly that might say something that they're obviously looking at the long-term vision as well. Especially since if we look at Delta and its stock right now, Delta Airlines is down over 25% in the past week, and today alone it's down 5.16%. So obviously it's not doing too well, and for him to go ahead and pick up millions of shares is a pretty big deal, and it does, I think, kind of prove his quote, which is to be fearful when others are greedy, and greedy when others are fearful. And this, if you haven't heard this quote, I say all the time on this channel. I'm going to say it again here. Be fearful when others are greedy, and greedy when others are fearful. And in my opinion, people are very fearful right now. So perhaps it's time to be a little greedy and follow Warren Buffett in, averaging down or buying in or whatever it may be, and writing out for the long term. Anyways, this is Stockerfinance, and I'll see you guys in the next video.